Hello traders, today is Monday, May 19, and let's talk about market and our portfolio. Last week, market was up all week, and now I see that futures down about 70 points. I'm talking about ES futures. So looks like correction started. We don't know how deep it's gonna be, uh, but it could be deep. Let's talk about our positions and what we can do about it, how we can adjust it and be prepared. First, let's talk about our straddle portfolio. So the first one is Amazon. It's in pretty good profit, about 12.50. Uh, let's see. Uh, well, it's in good shape. Let's see what delta. It's just plus 6. It's neutral, so we probably don't need to touch it. Everything fine here. Uh, Next one, Citigroup is also in profit, about $500. But this one has a negative delta, minus 50. Let's see. Because we're expecting that it's going to be some kind of correction, probably we don't need to touch it. But if you would like to cut that negative delta, you perfectly can roll your short call at the money from 70 to 75 and make it like this. But I will wait. I wouldn't like to touch it right now. Next one, CVX. CVX, finally we get in profit, $300. We have a pretty big positive delta, about 190. What we can do here, we have right now total three short puts and one short call. So we can add one short call here to make it a little bit less positive delta. Let's see. For example, we have 150 strike June call. We can add one more. Well, it won't change much. Let's try to add short call, different expiration, a little bit longer. If we go to sell put, uh, change expiration. Let's go to August. Oh, sorry. We need to we need to do short call, not short put. So now we have 153. You can see how structure changed. Now our break even about 138, and it's gonna be better. So we're probably gonna add that July 150 call to reduce little bit positive delta here. Google also in profit, about $150. Our delta is plus 46. I wouldn't touch it right now. It's in good shape, right at the middle of the structure, a little bit below. Let's wait and see. I hope that correction will not be very deep. Plus we have pretty good SQQQ hedge there, so shouldn't be big problem here. Let's see. Nvidia, it's 1000 in profit. Uh, Looks like it's also negative delta. At least it's compensated a little positive delta of Google. Right now it's minus 61. Uh, if it will be correction and Nvidia will go a little bit down, our profit will increase. So we have right now two 114 strike puts sold and one 114 call sold. So, but if you would like to reduce that negative delta, you can, if you want, roll our 114 call little bit higher, maybe even at the money, and make structure like this and cut the negative delta to minus 38. But again, I would wait for, before do that. If market will bounce up from here, where we are right now on Monday, we will probably need to do that. Will not touch it yet. What else we have? We have our O position. It's in small profit. Also could be adjusted because I start feeling that O will go a little bit lower because TLT is going down probably. It's dependent of interest rate, so we don't know. Looks like interest rate is start going up again, and it will hurt little bit our O position. And what we can do here, we can add some short call here. Right now we have a pair of straddle at 55 strike and 60 strike. So if we add, for example, one short call, right here, oh sorry, again I do it with put. Yeah, we will reduce a little our positive delta and increase size of our tent. Probably we will do it today. We will see. What else? We have Pepsi position. It's the biggest our problem. Why? Because Pepsi has a terrible quarterly report, earning report, and it's trading down. But I still waiting till it will bounce up a little because it's I think it's overdone. Let's wait a little bit longer. Wait till it will go about 135, 140 area, and we will adjust or add to this position. Right now we are right at the edge of our tent, little bit higher, and we will see. What else? Pepsi, Schlumberger, also in problem. And by the way, we did cut our losses a little, so you can see that the structure is for this June cycle is not gonna be in profit, but it's fine. We will wait, and when we roll them up, roll them out to July or August, that structure will be in potential profit, and we will continue to do that, and until we will go to back to profit. If you remember that oil declined so much, so everything related to oil price was big loss, but some of them already back to profit, except Schlumberger. But it will be also. Don't worry about that. I will think that everything gonna be fine sooner or later. What else? TLT, same thing, which I said about O. It's in small loss, about $300. This is how a structure look like. It's definitely positive delta. We have bunch of position at 88 strike, which is already above, because right now TLT trading at 86.3. So again, if we think that TLT probably will go a little bit lower from here, we can add some short call. Now we have, if you can see, we have much more short puts than calls. We have for July cycle 2 short puts and 1 short call, and for for August cycle we have 3 short puts and 1 short call. So we can easy add here 1 short call to equalize little bit delta. Right now it's minus 157. If we increase just by 1, we reduce it to 110. If you make 1 more, it will be just plus 64. So, and this is how our structure will look like after that. Oh, sorry. Kind of much better. We will increase possibility of profit if TLT will be in this range. So probably we're gonna do it today, just to add 2 short calls to reduce our positive delta. Walmart, if you know, it's in small profit. Walmart ran up so much, and I think it's tired, so we can wait a little right now till it will decline. Now we have about minus 78 negative delta. This is how our structure look like. I will wait this week and see if we won't see any decline. We will probably roll short call up, or maybe add some short put. Right now it's trading at 98. We have short call at 85. If we move it higher at 95, let's say that we will cut negative delta and increase our break-even point to 108. So let's wait and see. If we need it, we will do it. And XOP, huge profit. Right now, if you remember how I said, it was a big loss because oil declined, but we corrected it and waited patiently. Now it's in a pretty good profit. Nothing to worry about. This is how it looks like. Right now our delta, small positive, just 14. I will hold it and get even more profit from that. Now let's see how our other positions look like. If you remember, we start doing leaps, long-term call verticals and sell against it short-term premium using our straddles or ratio straddles against that. So let's see that portfolio. Here it is. It's brand new. It's just probably a couple of weeks. What we see here, the biggest problem is AZN. It's a British pharma, big pharma. All of pharma dragged down, but I hope it will be bounce up. What we have right now with this position We have a positive 330 delta. It's not too bad. We are a little bit below the our 10th range, and what we can do there, we can probably, it's possible to add some short call, but I will wait. I think that pharma is overdone. It will stay here, will bounce up, and maybe we will correct it next cycle, because right now we have a June cycle with our yes, it's two short puts at 70 June. We have long-term position, 8 long calls at strike 60 versus 6 short short calls at strike 80, and we have a 370 calls June cycle. So we will wait, and when it will be a time to roll to July, we probably to adjust it to reduce some positive delta and get back in profit with this position. Next, Dollar General, it's went back to profit, about $80, brand new position. Let's see how it's look like. It's look perfectly. Our price right now virtually at the middle of the profit structure, and let's see our delta. Delta is about plus 57. Not too bad. We will wait and continuously try to make money. We have a leaps vertical here, 4 of them. Strike 100 longs, 120 shorts. If you can see right in this position, we opened that vertical higher than the today's price. I will talk about it a little bit later why I do that. But you can, it's up to you. You can open that long-term vertical at the money or in the money or above the money. It depends of your expectations and your goal. Let's see next. International paper. This one is in problem. I don't know why it's so small. 10 looks like market is closed right now. Maybe it's just incorrect prices. But what we can do here, let's see, we have a small negative 135 delta. We can add to this position or roll our straddle to next cycle. Right now it's in June. Or we can just add one short put to increase positive delta. Let's see what we have here. Yeah, we have 10 short long calls January 27, and 8 short calls against that, and also we have 5 short calls June cycle and 2 short puts. So this is why our position has little bit negative delta, because we have 5 short calls against 2. We can roll it if you want right now, but I will wait a little bit. So if we roll it to July cycle, let's see how we can do that. So if we exclude right now June call and open strike 50 July calls, maybe 6 or 7 of them, and maybe add some short put. We will increase finally this size of our tent. We can add also here some short short put, maybe a couple of them, just to offset our negative delta. Can you see we add just how many? Just one of them, and so it's already plus 40 delta. Let's change expiration. Yeah. So probably this is what we should do. How I said, we will roll our June 45 in the money short calls to add the money and increase little bit size to compensate for debit roll, and add couple of short puts at also at strike 50, and this way our position will be in perfect shape, and we will wait and see how it's gonna play out in this month. What else do we have? We have MDT. It's virtually at zero right now. It's in perfect shape. Price is close to the middle of our structure. We have a positive 120 delta. I will wait and see what's going on. Target, actually we have to wait. This week it's gonna be earning reports. As right now, because of that, all options are elevated price and volatility. I expecting that TLT will go up because it's way oversold, and if we go higher after earning reports, right now we have about 300 positive delta. I expecting that it will go back to 110, 120 area, but we will see. If not, we will probably gonna adjust its position. And finally, we have our SQQQ hedge, which definitely down because a couple of weeks market is went up, but on Friday we close our 32 calls, and now we have more longs than shorts and perfect shape, and we're waiting for market decline. When it's happened, we will add again short-term short calls to reduce cost of that hedge. By the way, I input here pretty big hedge. Why I did that? I just put exact same size which I have for my portfolio, but my portfolio pretty big, so probably you don't need this this kind of big hedge. Right now we have a 30 longs against 25 shorts. It's for January 2027, long term. Probably you don't need this big size of hedge. I think that you have to open it according to your risk and portfolio size. How to choose that? Well, usually I try to assess what my portfolio will do, how much it's gonna lose if market decline 20%. And I will try to compensate at least half of that loss with my hedge. Don't forget that that SQQQ is a triple ETF. So if QQQ will go down 20%, it means that SQQQ will go up 60%. So if right now it's trading at let's say 23, 60%, it will be probably 35 or something like that. This is why we sold calls at strike 40. So it's pretty safe for 20% decline, and it should be pretty good profit. With this hedge size, you can see that we protected up to probably $50,000. I don't expect that we will get $50,000, but don't forget if volatility will increase because this position has huge positive vega, it will be pretty close to 50,000, maybe 40 or 35 if market decline 20%. So this is how I calculate size of my hedge. You're probably gonna do the same way. That's it about our portfolio. Just would like to talk about little bit about strategy which we use because it was a couple of questions in Discord channel why I use long-term leaps vertical, call vertical instead of just long calls. Well, you can use just leaps calls, guys. Nothing wrong with that. Why I like verticals? Because it's a little bit more flexible. Let's say that if stock start declining in price, your leaps call will lose money and nothing to do about that. Well, you can actually roll it somewhere, but with call spread, it's easy to adjust. If stock go down, our short call of the spread will make money and probably will be cheap. And if I see that first of all, it's leaps, it's in our case it's 600 days till expiration. Let's say that if in first couple of months of the trade that short call lose at least 50% of value, I don't mind to reduce size of that short calls and make our position more positive delta and wait for bounce up. When it's bounce up, I will be perfectly comfortable to put that short calls back. So this way in 600 days, if we can do it at least couple of times, I think we can do it much more than a couple of times, we can make that spread virtually free. This is my plan, that's why I like it. Now about position of that spread. Yes, you can put it at the money, you can put it out of the money, above the market. Why and why to choose different? I mean, why we choose one over another? Well, it depends of your expectation first and second of your strategy. If that vertical, long-term vertical, is the main source of your income, if you're expecting that long-term price of stock will appreciate and you can make up to 100% profit from it in 2 years, you probably better to set up that call spread at the money or even in the money. But if the main source of income is short-term premium from the straddle or strangle, whatever you use, because from when we use a short-term straddle, don't forget we have a short call, and if price of stock will go up fast and far, our short calls will be in trouble. To protect against that, we can open out of the money leaps call vertical. So it's the same, exact the same way as we did with our ES futures put protection, put spread. If you remember, we opened long-term put spread below the market just to hedge our short puts. Same exactly idea, you can use it as a protection against your short calls, because if you pick the right stock, right company, it's probably a much higher probability that price of that company will go up than go down in long term. So this vertical could be first of all source of income, because probably if it's out of the money you will pay just 20-30% of potential profit from that spread. So it's big potential if stock will go up, but at the same time it's pretty cheap, so if stock will go down you won't lose much from that spread. This is idea to open the spread out of the money. That's it for today. Thank you guys. I hope that we will be fine this week, and that correction which was started, I see right now it's minus 80 for ES futures. It won't be pretty deep, but we will see, and we fully prepared for that, and hopefully we're gonna do well. So again, one more thing about our ES strategies. I still waiting till market decline and volatility will go up a little to start to building our favorite strategies. But believe me guys, with our strategies with stocks, it could be easy make 20 to 50% per year, and with much less risk, at least with margin risk, because you know that the biggest problem for our portfolio was a huge margin increase from tested trade, which pushed us to close our position with big losses at the worst possible time. I doubt that it's possible with our stock strategies. This is why it's much safer from this point of view. Thank you very much. See you in Discord. We will discuss, and how I said, I show you a couple of possible adjustments of our portfolio. We're gonna probably execute it during this week. Bye bye guys.